Hey everybody, Art Wood Mortgage Team, your favorite mortgage guy on the planet. If you didn't know, just ask me, I will tell you. Today we're talking about self-employed borrowers versus W-2 borrowers. I actually held an event the other day, and it was a CPA was answering questions, and they said, how come self-employed borrowers have so much problems getting mortgages when W-2s don't? And he said, well, why don't you ask Art? So she did, and I was like, well, look, at the end of the day, y'all are exactly the same. Self-employed borrowers are exactly the same as W-2 borrowers. You get credit for what you pay taxes on. You don't get paid in W-2. You don't get paid on what the company makes. You get paid on what you pay taxes on. And when you're self-employed, you don't get the gross revenue. You're not paying taxes on that. So, the gross revenue is a false number in that that's not what you made. That's what you brought in, but there's expenses. Unless every dollar you bring in is 100% profit, which is wonderful, then that's not what you're paying taxes on, and that's not what you made. Now, I have seen all types. I've seen the folks that don't write off anything, and I think that's a little sketch because there are expenses. I've seen folks that do it realistically and write off only what their expenses are, and I've seen folks that are very, very, very creative and make up expenses that maybe aren't really there. So my thought process is on that. That's your prerogative to do what you want to do. I tend to be one that is pretty on the level. I write off what is actually expended. So you got to come to grips with that from a lending standpoint, whether potentially IRS standpoint too. But that's one of the reasons why it brings in the opportunity for a bank statement loan. So in less than 1 minute, I want to tell you, a bank statement loan is basically they get 12 months of business bank statements, and they add up the deposits, and then depending on what kind of business you have, they'll start with a 50% expense ratio. But that's a way for self-employed that writes off everything to still get a loan. Now, here's the deal. The interest rate's higher, but if you're saving $50,000, $100,000, $20,000, whatever it is in taxes, is it okay that your mortgage payment's $100 or $200 more higher? And I would say yes. If you got $50,000 extra in your bank and it costs you an extra $150 for mortgage payment, that's a pretty good deal. So one of the things that I do is I take a look at the tax return to see what's better. What can you qualify for? Then we look at bank statements and see if we can do a bank statement loan and see if it makes sense. So I hope that helps out a little bit. There's always that debate between self-employed and W-2, and at the end of the day, you're always going to get what you pay taxes on unless on a conventional loan, unless we go with a bank statement type loan. And again, that interest rate is going to be a little bit higher, but the trade-off is often worth it. So give me a call if I can answer any more questions and turn your mortgage into a work of art. Take care.